Hi there, and welcome. So we've got a dedicated resource for our associates in our associates club. I'm very pleased to introduce David Abel from Vision IFA today. Welcome.
Morning, Ross. Thanks for having me.
Thanks. Yep. So what we're going to do today is some really focused kind of content and information for our associate dentists and what they should be thinking or what they should be implementing for their financial planning. So hopefully you're okay with that.
Yeah, it sounds good. Sounds good.
Cracking. So maybe just as a bit of a kick-off, just give us a little bit of an intro about Vision IFAs and how you can help.
So the company is myself and my wife Alana that are both advisors. We've got a support team as well of three people that really help us out. But what we try and do is help people build financial plans, and what that looks like is having the conversations about what you really want to do with your life, which kind of sounds like quite a deep question, which I guess it is. But that's
Yeah,
the really important stuff, and mapping out what you want to do.
yeah,
Much like a lot of dentists do with their career, in terms of making a plan of where they want to be, whether it's either their business or their career. But it's just doing that in financial terms so that people can make the right decisions to live the best life. In
yeah.
essence, that's what really financial planning is to the core.
Cracking.
Um,
Yeah, no, so we always choose our partners very carefully, and I want to kind of highlight, I suppose, your independent financial advisors. Can you just kind of explain how important that is as well?
yeah, I'd say we're fiercely independent, which is important to us, and it just means we've got the flexibility to pivot if we need to, because providers in most industries generally will change. There's change of leadership, and that could prompt poor service, poor products, and poor results. So we like to be flexible and independent, so that if that does happen, we can change the systems that we use to suit in our client's best interest, which
Right.
sometimes isn't the case with a restricted advisor. They're kind of
Yeah,
set to selling a certain set of products,
yeah.
like pensions and certain amounts of protection, whereas we can search the whole of the available market, which I think is the best result for the client.
And that's absolutely what we want. We want, we don't want to be kind of constrained. We don't want myopia. It is a very important ingredient, which I don't think sort of, maybe kind of if you don't realize what's going on, it can you don't realize that perhaps you're not getting kind of the full scope of market.
Yeah, of course. Of course, I think a lot of people, when they meet an advisor, it's either through a friend or recommendation or through work. And sometimes that question isn't asked. But if you look at the regulator and all the guidance, the first thing they'll kind of recommend is, look for an independent advisor. Most
Right.
pension providers will give that guidance.
Excellent. So, some of our viewers will be self-employed. Some will have limited companies. Might make a difference, look, which I'm sure you'll elaborate in a moment. But what kind of recommendations, or what do you think some self-employed dentists should be considering to make sure they're adequately kind of covered and the plan is in place?
Yeah, good question. I think for me, a really important part of this process is having a finance team that collaborate really well. So that would be a financial planner or advisor that works with your accountant well, just because they both cover different areas and there's a bit of crossover, but making sure they're aligned means you're going to, keep all your ground covered really. So I think that
Yeah.
is at the forefront of everything. Uh,
Right, totally agree with that as well, by the way. Working together, having a professional advisors working together is critical, in my opinion.
Well, the tax burden is the largest since the Second World War, and you need to take every opportunity you can. So you need to have joined up conversations with your accountant, with your advisor, also with your solicitor to make sure your estate's in place.
Yeah.
But all of that is really important because it compounds those decisions, the tax saving that you do for clients, the compound interest on the growth that when we
Yeah.
put investments in place, it's all huge, especially over the span of a 3 decade career. So I think that would be the first point, which is really important. Um, then we'd look at protection, which would be income protection, critical illness, life cover. If you've got a young family, really important. And it's about having that conversation of if something was to happen to you, what position are you going to be in? And it's a really difficult conversation to have with some people because we've all got that thing within us where we think, we're not, we're never going to be seriously ill. We'll just crack on. regardless. And what I like to do is kind of take that emotion away and think about, instead of you that's generating that money, if you just had a black box in your utility room that was paying that money that you were producing, how much would you insure that black box for? If it was to break down or theft, if it was giving you either five grand a month or something like that, you'd probably put a decent premium on that. So a lot of it's about changing perspective, but protection would be the first point, I'd say, making sure that if something does happen to you, you've got something that helps you pay your mortgage, help you pay your bills, kids' fees, that type of thing. I think that is kind of the number one point. So that would be the first thing, but for self-employed, because you're not going to get any sick pay generally if you're self-employed, unless if you're working with the NHS, might be slightly different. Obviously, you've got some cover there, but if you do transition to private, or you're working a bit of both, then you do need to make sure that you've got that in place. And really what I would say, it's about knowing what you need to have covered, seeing an advisor so they can outline this is what you need, and then we can discuss affordability off the back of that. But then you can make an informed decision on your terms.
Great.
So that would be the first point, protection. And then, investments and pensions, they kind of come second. So how we like to do things is, first we'll have the conversation about what you're trying to achieve, what you're aiming towards, whether that's investing in yourself by doing courses and doing specialisms in your industry, and whether that is a good investment. Most of the time it is, because you're going to generate earnings further down the line. But it's like, what do you want to do? Is there a second home in your plan? What's the cost of that? You want to do big holidays with your kids? Whatever you want to do, we'll map that plan out. Then we'll crunch the numbers and say, okay, we're aiming for these things. Want to help the kids with a house deposit, that type of thing. We want to be financially independent by age 60. These are general goals. And then once we've got that, we can kind of say, okay, we'll build a plan, crunch the numbers with some cash flow, and then we can kind of give guidance of, well, this is how much you need to be saving monthly to achieve all of these things. And it's quite an interactive conversation, because it might not be affordable at the beginning of a career when you are investing in yourself and that type of thing. But at least you know where you stand and you can start working towards it. And then once we've done that, off the back of that, we would then talk about ISAs, pensions, and other investments.
I love all the kind of the organization and planning with this, because it dovetails supremely with tax planning as well. So if we kind of know what we're doing and we know when we're doing it, and we've got an idea of the planning and the preparation, your tax optimization also becomes kind of a lot easier. And Simon, our tax director here, would take that information, and you can do so much if you know what's kind of coming, with being prepared essentially.
And the more time you've got, as you'll know with tax planning, the better, especially if you're talking about an exit or something like that. The more time you prepare, you can structure the organization to benefit the most and pay the less tax, which is what most of us are trying to do.
Great. So some associates watching this will also have their own limited company, so they'll probably be earning a little bit more. Will have done some kind of tax planning to get them in the right kind of vehicle, and they might run a limited company. So does that change the dynamic at all, David? Is there more or less they can do?
But there's some advantages in that in terms of protection, because you can put some protection through the business, which is which is always good, because you're reducing your tax burden. So that is another advantage. But also with pension contributions, you can reduce your corporation tax liability. So in a limited company, you'll pay corporation tax on your profit, but you can just reduce that in the form of a pension contribution, which can be really beneficial. Again, that saving compounds, especially with the high tax rate at the moment. So they're two key benefits. Putting protection through the business, and you can do that with life cover and something called executive income protection. That might not be suitable for everyone, but it is an option. And then pension contributions, making pension contributions.
We've got to wring out every last bit of saving we possibly can.
You have to across the board. And again, it all compounds to save your tax and put more money in your pocket, which is what we're trying to do.
Einstein said it was the eighth wonder of the world, didn't he?
Well, that's it, exactly. And it is magical when you see it. And with the modelling, And part of that process, which I mentioned, is we can model, what a 6% average annual return does over 3 decades, and if someone's willing to commit, let's say, £30,000 a year into the pension, what does
Yeah,
that do at age 50, 57, 60, 65, whenever they want to retire? What does that pot look like?
yeah,
And when someone can see, let's say it's over £1 million, then it's a bit of an easier decision to make,
yeah.
and kind of just following it, putting that money in blindly.
Excellent. Great. Well, any additional comments there, or what should any of the viewers do if they wanted to kind of proceed with the next step on this?
Yeah, I think we do free consultations to dentists that are looking for advice and just want a sense check on their position. So if they want to reach out to me, we can put our details in. I'm not sure if there's a kind of a contents page or
Yeah.
note. We can put my details there where you can get in touch with me, book a consultation. We can just have a chat about your situation and answer
Great.
any questions you've got. I think that'd probably be the best first move.
Great. Well, thank you very much, David. Really appreciate it and your expertise and experience of dentistry there. I'm sure you'll look after our associate dentist. Thank you very much.
Always a pleasure, Ross. Thank you.
Thank you.